Alrighty, welcome to the video. Methodical Man here. We're going to be going over some back testing here. Just come back test with me video here. I think this is episode 4. And you saw from the title there, we're going to be back testing a 5-minute mechanical strategy and see how it works. I don't know the results of this strategy. I have no clue. So we're just going to do it together. We're just going to do a couple of weeks here. I'm not quite sure how long it'll take between each day to do it. So we're going to go over the rules right quick. Just so you guys know, I'm not going to post them on the screen, just going to kind of read them out to you. So we're going to be on the 5-minute time zone, New York time frame, obviously. And we are going to draw a line between midnight. So we're going to mark out the high between midnight Eastern and 8 a.m. Eastern, the highs and the lows. And we're going to wait for price to sweep one of these levels on the 5-minute chart between 10 a.m. and 11 a.m. Those are the times that we're going to be taking the trades. So it says, look for an Ifvg to form after sweeping the liquidity. Enter on the Ifvg closer candle. Stop losses above the previous high or the low. Target a 1-to-1. Only take trades between the hours of 10 and 11 a.m. That's it. One trade per day. So let's get started on this. So basically what we got to do is we got to mark out the high and the low from midnight. And I'm just starting from last Monday, a week ago. So midnight to 8 a.m. Let's find this. And again, guys, this video may take a little longer because it's not something I've done here. So there we go. That's the high. And that's the low. And, you know, midnight to 8, you're normally going to have a little bit of a tighter range there. We are on the 5-minute chart here. So what we're doing here is we're going to now look and see what side it took. Obviously, it took the high, right? We pushed through here, it took the high. Now we're looking for an inversion gap to form between 10 and 11 a.m., okay? So right here, we have a bullish gap here, and then a bearish gap that closed below it. So let's mark that out. So this is the gap that's being inversed, all right? If you guys can see that. If you don't know what an inversion gap is, basically it's when price trades back through a fair value gap, and that's what we have here. So we have a bullish gap here, price traded back through it to the downside here. So we would enter on the closure of this candle here. Now you don't wait for price to retest this zone. You could, but on this particular strategy we're not, because it doesn't always retest the zone. So we're just going to look at taking our entry from the open of this candle here. So in this case, this would be a short. So we would enter short from here, and stop would go at the top there, and we would just be targeting a 1-to-1. All right. Now we can see, let's move this over so we can get a better look at this. Where will we enter? Right there. Is that right? No, that's wrong. We enter right there. Yep. So as you can see, it does not hit our 1-to-1. Now, the way I trade these gaps and the way I would trade this strategy, once we breached an internal low, like we did here, so once we breached this swing low here, I would move my stop to break even, right? Because at that point, if price comes back here, we don't really want to be involved, right? And then also the way I kind of trade this is if price closes back above this gap, then I would exit the trade. So if my stop wasn't at break even, I would be exiting at 397, and we would be short from 367. So in that scenario, it would be a 30 handle loser. But in all likelihood, I would already have my stop at break even. But for these purposes, we're going to follow the rules of the strategy here, and we're going to call this a 46 handle loser, right? So 46 point loser, and we're going to add that into the loser category. And let's move on over to Tuesday's action. And we need to mark out the high and low between midnight and 8 a.m. So where was the 8 a.m. candle here? So that is the high. And then the low. Well, clearly we took the high first. And where would the low be? Again, you guys are going to have to bear with me a little bit here. Probably would be easier to do this through the FX replay, but, you know, This is how we're doing it. I like to do my back testing manually. So in this scenario, we took out the high on news here at 8:30, and then we didn't inverse anything, and then we took out the low. So in this case, this would just be no trade because, well, actually, yeah, because we took out both sides. We swept both sides of liquidity. So I think if you sweep both sides, it doesn't say that in the rules, but I would say if you sweep both sides, that would be a no trade. So we could also look anyway at 10 a.m. There's no inverse gap in there anyway between 10 and 11. You do have one here. I actually would like this trade because we swept the data low. So like this is a trade I would take, but not based on this strategy. I'll just tell you guys, show you this since we're looking at back testing. This is one of the things I'm going to start doing here at the 8:30 news levels. So this is a data high and a data low. So you see how we have this big wick? Price is almost always going to go back to this. So this has nothing to do with this strategy. I'm just telling you guys this. So we left this big wick here. We didn't run the highs. We moved away from this wick. As soon as we inversed this gap here, so I would have got long on the closure of this candle here, 467. My target is this high right here, 547. Because once price moves back towards this direction, you're almost certain it's going to run the data high here. So anyways, this would be a no trade, but this would be a trade that I would have taken. But based on these parameters, that's a no trade for Tuesday. So let's move on to Wednesday here. And like I said, we're going to do maybe 2 weeks here. So a very short kind of test there. Not going to be a huge amount of data, but we'll take it for what it's worth and just kind of see if it's worth delving deeper into, right? So here we go. We ran the highs, and then we're going to be looking for 10 a.m. So here's 10 a.m. right here. So we want to see if we ran the highs, then we want to see an inverse to run the lows. That's what we're looking for. So we're looking for a fair value gap to be inversed. We don't have any here. But we do have a gap right here. It's a small gap. If you guys can see that, I'll mark it out for you. Ultimately, I'll probably take it off, but that's the gap right there. So that gap is inversed. So we would be entering short for the closure below the gap. So let's go ahead and put our short position on there because it helps if I select the right one. And I'm gonna put it over here so we can see this a little better. Stop is going to go above the previous swing high, so stop's going to go here. And we're just going to target a 1-to-1. So there we go. So in this particular case, 30 handles. Do we hit it? We do. We come down and run it, so this is a winner for 30 handles on Wednesday. And you can see it gave us the 30 handles, and then obviously we had some news there too. That must have been like FOMC or something. Who really knows? All right, let's move over to Thursday. Let's mark out our high and low between midnight and 8 a.m. There's the high. Looks like we took the low, obviously. That is not. Okay, let's make sure. I want to make sure we got the right one. So this one here. So in this case, we ran the low, right? We ran the low, and now we're going to go over to 10 a.m. and we're going to look for an inversion gap. And like I said, we want to take the entry between 10 and 11 a.m. So right here, we have a gap right here on the 10 a.m. And then we have one here at 10:15. We have to close below one in order for it to be valid between 10 and 11. No gap there, no gap there. So this is just a no trade. So that's just simply a no trade here because we didn't inverse any of these gaps before 11 a.m. And you can see price just kind of sold off there. You're going to get a lot of no trades with these, it kind of looks like. So that's already 2 no trades. And we're going into Friday now. Going to mark out the highs. Can't forget to do that. The high and the low. So we'll just use what we already got here. And then the low, let's find midnight. When was this candle? 8. So that's before then. This looks like this is probably going to be another no trade, right? Let's just take a look and see. So we ran the lows first, and then we ran the highs before 10 a.m. So it's another no trade. Like I said, it looks like these are probably going to have quite a bit of no trades in them. I don't love that. I like a strategy where I don't need a trade every day on a mechanical strategy, but it would be nice, right, to kind of have a trade every day there. All right, that's the high and the low. So let's go to 10 a.m., see which one it ran first. Obviously, we ran the high first. And let's see if we inverse one. And we do, right. Let's make sure we got it. Right here. Can you guys see that small gap right there? So here's our inverse gap. So what we're looking for is for price to close below the inverse gap. So this one right here did not close below. It almost did, but it did not. This one did. Has to be clear. So this one clearly closed below. So let's enter our position here short. Like I said, we're going to put it right over here. Oh, we need to put it below the candle. There we go. The candle that closed below, stop's going to go there. And we're going to look at a 1-to-1. Let's see if we got it. It's going to be close. No, we did not. So you can see how close it was there. We inverted it. And then, now here's the thing. I might look at this because this one, the last two that have been losers did retest the gap. But in this particular back test that we're doing here, we're not going to adjust anything. So my stop would have been at break even already as soon as we breach this internal low right here, internal swing. I would have already moved my stop. But it's not what we're doing here. So in this test, we're just going to stick to the mechanical. So that's a loser, 27 handles. And let's move on to Tuesday's action. Not really going to be a whole lot of not enough data here, I think, on this test because you're getting so many kind of no trades there that it's going to limit the amount of data that we have there. So 7 a.m. So that's your high. I don't even have to mark out the low here. Obviously, we took the high, right? So let's move over to 10 a.m. and see if we get an inverse gap. So we're going to wait till 10 a.m. and right here's 10 a.m. And we already got us a little square here. So let's pull it on over. Where'd the gap go? Let's take this off here. Where did my gap go? I just missed it. I lost it again. Oh. We ran the high, so we need a gap. Okay, here it is. I'm blind over here. I couldn't see it. I was like, where did it go? I knew it was there. So we are waiting for this gap to be inversed, and right here's where it happens. We close below right here. So we'd be taking our short right there. So right here we close below. Stop goes at the high. And we are looking for a 1-to-1. Don't even really need to mark it out because it's not, we don't hit it. We do not hit it. The only thing is, like I said, I mean, if I was entering this trade myself, you know, I'd be going to break even as soon as we breach this here, which we did by 1 tick. But in this scenario, we're not going to be looking at that. So that's 31. So far, not looking all that hot. That's 1 winner, 3 losers so far. So 1 winner and 3 losers. Let's go to mark out the high, although I don't think it's necessary. Clearly, it's we're going to run down to the low side here. Let me take that one off. Where is the low? I'm trying to find the 7 a.m. So right there. Oh, so actually we do run the high. We run the high first here. So let's look at the 10 a.m. Let's find our gap. Let's take that off. There's a small gap there, but we're looking for the first inverse gap. I think it's going to be right here. Yep, sure is. So you got a small gap right here. So this is going to be your first inverse gap. So let's mark that out. There it is. So once we close below that gap, we'll be taking a short. And that happened right here. So I'm going to move this over here so we can see it a little better. Stop's going to go right there at the high. And we're just going to target a 1-to-1 here. So let's move this down. So we enter right there on the close below the gap. Do we get stopped out? We don't. And we go to the target. So that's a 39 handle winner. And let's go ahead and move on over to Wednesday. See what happens there. So 2 winners, 3 losers so far. If you guys are interested in trading futures, we've got all the links down below for Topstep, APEX, and Bulenox. If you could use those links, it does help the channel. We do appreciate it. There is the high, and let's see here. That's the low. So let's move on over to 10 o'clock. Let's see which one gets taken first. So we can see the high got taken first there. So after 10 o'clock, do we have any kind of inversion to the downside? And we do. You can see we have a gap right here to the upside. And as soon as we close below it, we're going to take the short and target a 1-to-1. So let's put on our short position. Right here, this is where we close below. Stop's going to go right here at the top of the swing. So in a 1-to-1 scenario here, we're looking for 55 handles. It's going to be close. Okay. Let's slide this over so we can see. So you can see we got short right here for the close below the gap on this candle here. We did take some drawdown on this one, but ultimately it hits the target over here for 55 handles. So 3 winners, 3 losers right there going into Friday here, it looks like. If you guys haven't already, hit that like button for me. If you're not yet subscribed, please subscribe to the channel. It does help us. We do stream 5 days a week live, showing all of our entries and all of our exits. Complete transparency for you guys. So if you're interested in that, we do have currently, I think, around 22 funded accounts maybe. I'm not sure exactly. Somewhere in there. So that's the low there. We'll go ahead and push this up to that low. We are looking to try to get us a nice payout there in January. So join us for that journey. Let's find the 7 a.m. candle right there. So at 7 a.m., that is the high. Just going to take these off so they don't confuse us. So now we're going to go. So obviously we ran the high. So now we're going to go to 10 a.m. and we're going to look for an inversion gap after 10 a.m. Let's take this off. So are there any gaps in here? We do have this one at 940. So the gap, I'm pretty sure the gap can be formed before 10 a.m. I think actually it has to be formed after 10 a.m., doesn't it? Based on the rules. Yeah, I think it does. This would have been one that I would have taken, that I would take myself, but based on these rules, because this gap formed, I guess, before 10 a.m., you wouldn't take it. But I would take this just in my everyday trading. You know, short here, stop here. You exit on any close above the gap. And then 1-to-1 risk to reward. So this would 100% be a trade that I would take, just because, you know, it meets my criteria. But in this back test, so this would be a winner if you took it, 45 handles. But in this particular back test that we're doing, we wouldn't take it. So right now running at about 50%. We took 6 trades in 10 days, so that means you're getting a trade, 60% of the time, which is a little bit less than I like for it to be. So we're at 124 handles on the winning side, and let's see here, 104 handles on the losing side. So that's a net on this particular test of 20 handles. What is 20 handles? Is that $400? Yeah, $400 using one mini through 2 weeks. So like I said, this is a very, very small minor snippet of a back test. There were 2 trades in here that meet my criteria for a trade that's not mechanical. But, you know, this one and then one further back where I showed you guys, had you taken those 2 trades, you'd be up a lot more money. But just using the mechanical strategy here, I think it's intriguing, right? These results are not anything, they're not mind-blowing, but this is using something that's very mechanical. So I'm probably going to go back, take it 6 or 7 months back through the data, do it one at a time, and kind of see what we end up with there. And I'll let you guys know what the results are. Maybe we'll film another video doing a little deeper dive into it. Or, you know, check it out yourself. Take your time and go through there. I am going to post this video on Christmas Eve, so if I don't see you before the live stream on Tuesday, Merry Christmas, Happy New Year, all the things. And we will see you guys next time. Thanks for watching.